Welcome back, friends. Previously, we have begun with the computation part of preparation of fund flow statement, and we have discussed in detail all the entire step that has to be followed while preparing a fund flow statement. And the thing is that we have dealt only a pattern or a type of adjustment case that has to be followed in a fund flow statement. There are numerous cases and adjustments that has to be followed, and we will be discussing different patterns in each sessions. So let us discuss another type of case that has to be dealt under fund flow statement. Next case. The comparative balance sheets of Sound Limited as on certain dates will be given. Just go through the date, whether it is in the order. It has to be begin with first year followed by the subsequent year. Here in the beginning, the addition information is given. An interim dividend of rupees 30,000 was paid. We all know what is meant by interim dividend. Next one, assets of another company were purchased by issue of equity shares for rupees 1,50,000. Assets includes the plant and machinery of rupees 80,000 and stock 40,000. The meaning is that the company has purchased some assets from another company by issuing the equity shares. And for issuing the equity shares, the company has bought machines of rupees 80,000 and stock 40,000. So for buying this 80,000 and 40,000, they have given shares of rupees 1,50,000. So it doesn't match because they have given, or the concern, this concern has given equity shares costing 1,50,000 and they have just got only 1,20,000 worth of asset. It doesn't happen in actual life. Whenever you are issuing a certain equity shares or shares for to the other concern for purchasing the assets from that concern, you have to get the assets equivalent to the value of the equity shares. Here there is some sort of difference. So actually that difference is the hidden adjustment or information in this question. We will tell that part. Next one, during the year machinery was further purchased for rupees 60,000. It means during the year this concern has further purchase of a machine of rupees 60,000. Means the company might have purchased some amount of or some machinery costing certain amount. After that they bought again some machinery for rupees 60,000. Okay, you need not worry about that. Next one, fourth adjustment, depreciation provided on plant and machinery 1,20,000. Okay. Next one, provision for tax may be treated as a current liability. See, there is an item provision for tax. Usually I have said that provision for tax is a non-current item. So you have to prepare under non-preparation of non-current accounts area. But here it is said that provision may be treated as a current liability. We all know where are current liabilities are going to take. Current liabilities are considered in the first step where preparation of schedule of changes in working capital is done. And previously I mentioned that usually schedule of changes in working capital will not be affected by adjustments, but in some cases some type of adjustments might affect. This is one such type of adjustment because provision for tax is usually taken as a non-current item, but in this question it is specified that it has to be treated as a current liability. So when some items is specifically said to be treated as some other item, then you have to consider that. So remember, while preparing schedule of changes in working capital, you just go through the adjustment, then you can see that this type of information might be given. So just go through it. Next one, rupees 5,000 received as interest on investment, including rupees 2,000 received as pre-requisition interest, which is credited to investment account. You may find it confusing. The meaning is that 5,000 received as interest on investment, including 2,000 received as pre-requisition interest, which is credited to investment account. It means the concern has earned a total income of rupees 5,000 during the year. Out of this 5,000, rupees 2,000 is a pre-requisition interest that is not related to the present period, and remaining 3,000 is related to the interest on investment, which is actually considered as a non-operating income. So you have to split the amount of 5,000 as 3,000 and 2,000, because these two items has to be dealt separately. Because one is related to the income or cash earned during the operations of the business, that is 2,000, and 3,000 is considered as a non-operating income. That is the concept of this adjustment. So that you have to be dealt accordingly. We will deal that part. Next one, this is the balance sheet. As at the beginning it has been mentioned, comparative balance sheet of Sun Limited. We all know what is meant by comparative balance sheet. Balance sheet that consisting of opening as well as closing. So this is a balance sheet. If you go through the items, you can see that first one, share capital, followed by capital reserve. See, capital reserve in the beginning it is 50,000, ending it is 50,000. So in an item which is having the same amount in the opening as well as closing, such items will not have any effect during the computation part. You need not have to worry about this part during the computation. Sometimes there may be any adjustment relating to these such items. In that case, you have to consider accordingly. Otherwise, you need not have to worry. Next one, P&L account. Here it is given in the question. Debentures, creditors, bills payable, provision for tax. Next one, goodwill. See, goodwill in the beginning there was nothing. By the end there was 30,000. So remember the next one, next point which I am going to mention is very important. Any intangible assets, if its value is increased means if it is having a higher value when it compares to the beginning year, it is considered as a purchase. But if there is a decrease in the value of an intangible asset, that is in the opening there was higher amount and in the closing there was lower amount or nil amount, it is considered as intangible assets written off. See, both the terms are different. When there is an increase, it is considered as a purchase or an application of fund. But when there is a decrease in the value of intangible assets, it is considered as an intangible asset written off. It is a non-current item, or we can specifically say that it is a non-operating expense. Remember the two concepts. Because usually when there is an increase in the value of asset, it is considered as a purchase. That is a common thing. But when there is a decrease in the value of asset, it is usually basically fixed asset. It is usually considered as a sale of fixed asset. But it is not working or it is not applicable in the case of intangible asset. Remember that part. Next one, land and building, plant and machinery, investments, stock. Investment usually will be a fixed asset, otherwise it might have been mentioned as a small scale investment. Next one, stock, debtors, prepaid expenses and cash. So this is how a normal question will be, and you have to prepare the fund flow statement on the basis of the details given. So first of all, let us begin with schedule of changes in working capital, and we all know how to prepare a schedule of changes in working capital. It has to be prepared on the basis of current assets and current liabilities given in the balance sheet. Additional information in most of the cases will not affect the schedule of changes, but in here there is one adjustment that has to be dealt accordingly, because provision for tax may be treated as a current liability. Current liability means it has to be considered in the schedule of changes in working capital. So let us prepare a schedule of changes in working capital We all know the pattern. It begins with particulars, opening year, closing year. After that, increase in working capital and decrease in working capital. And this is the balance sheet which was given in the question. And if you go through the items in the current asset side, first one, stock. In the beginning it was 2,10,000. In the closing it was 1,80,000. So there was a decrease in the value of the asset. So it has to be considered as a decrease in working capital, that is 30,000. Next, after stock, next item is debtors. Debtors in the beginning it was 90,000. In the closing it was 1,10,000. So there is an increase in the value of assets. So it is considered as increase in working capital. Next item is prepaid expenses. It is a current assets. In the opening it was 10,000. In the closing it was 5,000. So there was a decrease in the value of the current assets. So it is considered as decrease in working capital. So you have to record the term accordingly. Next one, cash or bank. In the beginning it was 30,000. In the closing it was 45,000. So there was an increase in the value of the asset. So it is considered as increase in working capital. So the difference amount has to be shown in the considerable side of the column. So once you have dealt with all the current assets in the statement, you have to take the total of the current assets. You all know how to take the total. First part, first column total, followed by second column total. You can see that both the amounts remains the same. So after the totaling of current asset, you have to go for the current liabilities. And if you go through the balance sheet given in the question, you can see that in the liability side, it begins with creditors. Creditors, in the opening it is 1,30,000 followed by 1,25,000. So there is a decrease in the value of current liability, and you know the rule for recording the difference amount. And whenever there is a decrease in current liability, it has to be shown in this column, that is increase in working capital. After creditors, you have to record bills payable. Bills payable in the opening it is 40,000. In the closing it is 65,000. So there is an increase in the value of bills payable. So whenever there is an increase in current liability, it has to be shown in the decrease in working capital side. And usually we were completing, or we were stop entering the items till now, but in this case it is said that provision for tax has to be considered as a current liability. So in that case you have to record that item also. So provision for tax, opening balance 60,000, closing balance 74,000. So there is an increase in the value of current liability. So the difference amount has to be shown in the considerable side of the statement. So once you have recorded all the items of current liabilities, you have to take the total of current liability, and you know how to find the total of current liability. Just take and total the amounts of the items shown in the current liabilities part. First column total has to be taken, and after that second column total has to be taken. Once you have taken the totals of current assets as well as current liabilities, you need to find the working capital. It's very easy to find the first total of current assets in the first column minus total of current liability in the first column. You will get the working capital for the first period. Likewise, if you take the difference between the total of current assets in the second year with the amount total of current liability in the second year, you will get the difference of rupees 76,000 in working capital during the second year. So if you go through it, you know how to deal with this part. There is a difference of certain amount of in the second year, so it means 34,000. And if you take the total of increase in working capital as well as decrease in working capital, you can see that this side is greater, so that amount is recorded, and it is shown again in this column. So if you take the difference, just like the taking the balance of a ledger account, here you get a difference of 34,000, and in here also you will get a difference of 34,000. If you are getting the same amount, your computation and steps are right. Since here the decrease in working capital side is greater, this amount is considered as decrease in working capital. This is how you have to prepare a statement of changes in working capital. So once you have prepared the statement of changes in working capital, depending upon the details given in the adjustment, you have to prepare necessary account. Remember, without the additional information, the compulsory two items account has to be prepared where provision for proposed dividend and provision for tax. In this question, provision for tax was given. Since it is treated as a current liability, you need not have to prepare the provision for tax account. So, next one, let us prepare various accounts. First of all, let us begin with share capital account. It is said that certain equity shares or share capital shares of our concern has been exchanged with the assets of the other concern. So, whenever such transaction comes, the entry will be written like this. Whatever the assets which you are acquiring, the assets account debtor to share capital. See, the share capital was 1,50,000. The plant and machinery was 80,000, stock was 40,000. And at the beginning, I had mentioned that there is a difference of certain amount. Whenever such a difference comes, it is considered as goodwill. So this is the hidden item in the adjustment. So this has to be considered while preparing share capital account. So remember this adjustment. Next one. This was a question, and let us begin with various items adjustment. First one, interim dividend 30,000 was paid. Since there is no opening and closing balance for interim dividend, you need not have to prepare that account. Next one, assets of another company were purchased during the year by issue of equity shares, and assets include plant and machinery, stock. So what all accounts has to be prepared? It is very easy. First of all, you need to prepare equity share capital. Here equity share capital, two balances are there. So you have to prepare share capital account. After that, the next item is plant and machinery. You just go through the information, you will get the items whose opening and closing balance are available or not. Next item is plant and machinery. Plant and machinery, if you go through it, you have opening as well as closing. So you have to prepare plant and machinery account. Next one, stock of rupees 40,000. We already took stock in the schedule of changes, so you need not have to worry about that. We will deal that adjustment during the preparation of share capital. Next one, during the year machinery was further purchased, we will deal that item by preparing machinery account. Next one, depreciation provided on plant and machinery, we will deal that part in the preparation of machinery. Provision for tax, it is already completed. And finally, interest on investment, and if you go through it, you can see that there is an investment of rupees opening and closing is given, so you have to prepare investment account. I just go through that adjustment. This is how you have to find what all accounts has to be prepared on the basis of additional information. So let us begin with share capital, because it is the most important adjustment in case. We will begin with opening as well as closing balances of the share capital. In the opening it was 6 lakh, so it is written the credit side, and the closing it was 7,50,000, it is shown the debit side. After that, we have prepared a journal entry just now, so we have to post that journal entry in the share capital account. So it will be recorded like this: plant and machinery 80,000. Next one, stock 40,000, and the remaining amount, that was the balance or the adjustment. And how did we find that difference? See, here it is 7,50,000. If you take the total here, you will not get 7,50,000. So there was a difference. That difference is known as goodwill. So you can either find the difference in the preparation of journal entry, or if you are not preparing the journal entry, you can find the difference by preparing the share capital account. So you have found the difference of rupees 30,000 in goodwill. So that adjustment is over. Next one you have to prepare is plant and machinery account. So that is the next adjustment given here. So for the plant and machinery also, you have to record the opening as well as closing amount. Here the opening is 6,20,000. Closing is 6,40,000. So just record these two items. We all know how to record opening and closing balance in the asset account. So that is recorded. Next one, you need to note down the various items that are relating to asset, basically plant and machinery. First item, interim dividend, it doesn't affect or any relation. Next one, assets of other companies purchase, assets include plant and machinery of 80,000. So plant and machinery of rupees 80,000 was purchased by issue of equity shares. So the entry will be plant and machinery account debited to share capital. So 80,000. And next item, during the year machinery was further purchased 60,000 and depreciation provided during the year is 12,000, 1,20,000. So depreciation by depreciation 1,20,000 is recorded. Next item, during the year machinery was further purchased rupees 60,000, so to cash 60,000. And finally this item 80,000 of machinery or plant and machinery was purchased by issue of share capital. So share capital it is written 80,000, and if you take the total of both sides you will get a same value. So it means that there is no purchase or sale during the period. If there was any difference in any of these two sides, it is considered as, if there is a difference in this side, it will be considered as to cash. If there is a difference in this side, it will be considered as by cash. To cash means there was a hidden purchase during the year, and by cash means it means there was a sale during the year. That is the concept. So you have prepared share capital account and plant and machinery account. Next account you have to prepare is goodwill account. Because in the question there is an opening and closing amount or details is given. Here opening no amount is given, so closing is given. Still you have to prepare goodwill account. So we know how to prepare a goodwill account, and it begins with opening balance. There is no amount, so let it be remain blank. Closing balance is 30,000, and next only known information regarding goodwill is there was an amount of rupees 30,000 as a hidden adjustment while dealing with another business concern regarding the purchase of asset. So that has to be recorded. So it is recorded as goodwill account debited to share capital. So if you look closely to the goodwill account, you can see that there was an increase in the value of an asset because of the transaction with another concern during the purchase of an asset. So actually here the goodwill is 30,000 by the end of the year is occurred due to this exchange, and it is not due to any cash purchase. It is done through share capital. So it is not considered as an application, because in the beginning I have said that whenever there is an increase in an intangible asset, it is considered as a purchase and it has to be shown as an application. Since it is acquired by issue of share capital, it will not considered as a flow of fund. We have dealt that type of journal entries in the beginning of this module. What all transactions has to be considered which led to the change in funds or no change in funds. So goodwill account, if you take the totals, you will see that there is no change. Next one, investment account, because there was an adjustment relating to investment. See, there is an income of rupees 5,000 received as interest on investment, so that has to be shown. So investment account is prepared. Opening balance is rupees 40,000, closing balance is rupees 50,000. The next information is that out of rupees 5,000 received as interest on investment, 2,000 received as a pre-requisition interest which is credited to investment account. So that has to be recorded in the investment, because 2,000 is credited in the investment account, so it has to be shown in the investment account rupees 2,000. And if you take the totals of these two sides, it doesn't tally, so there is a difference of certain amount in the debit side. Whenever there is a difference in the account while of a certain asset, it means if it is a debit side difference, it is considered as to cash. If it is a credit side difference, it is considered as by cash. In here, there is a difference of rupees 12,000, so it is considered as to cash. To cash means purchase. So right now we have prepared almost all the non-current accounts depending upon the details given in the question. So once you have prepared the non-current accounts, next you have to prepare the fund from operation statement. In here, we are trying to prepare an adjusted profit and loss, and we all know what is meant by adjusted profit and loss. It is another method. In order to find fund from operation, there are three different methods. We have dealt that part previously, and for the time being, we are using this method, that is adjusted profit and loss account. It is an account form for finding out the fund from operations, and it begins with details given in the question. For preparation of profit and loss account, we first begin with P&L account given in the question. It is given that in the opening it was 70,000, in the closing it was 96,000. So as per the adjusted profit and loss account, first of all you need to record these two balances. That is, in the opening it is 70,000, in the closing it is 96,000. So next, what all items has to be considered while preparing adjusted profit and loss account. I have mentioned that previously. Before you go for preparing adjusted profit and loss account, just go through the items given in the balance sheet. In the balance sheet, if you see that there is any reserves or provision for reserves, preliminary expenses written off, discount on issue of shares and debentures, any reduction in the intangible assets, such items has to be considered. So, after that you have to go for the adjustments, and after that you have to go for the accounts. So first of all, let us go through the adjustment. In the adjustment, it is said that interim dividend 30,000 was paid. So let us record that interim dividend in the debit side because it's a non-operating expense. After that, next one, depreciation. Depreciation provided on plant and machinery 1,20,000. You may think that in the previous question we didn't took that depreciation because in that case we have prepared provision for depreciation. So since there is no provision for depreciation in this case, you have to take the depreciation of the concerned asset. So it is given depreciation 1,20,000. Next one, interest on investment. Interest on investment, here in the question it is said that out of 5,000, 2,000 is treated and credited in the investment account. So 2,000 is considered as in part of assets, and remaining 3,000 is considered an income, and that income is a non-operating income. That's why 3,000 is alone shown here instead of 5,000, because 2,000 is recorded in the concerned asset account. So it is now a part of the concerned asset account. The remaining amount is 3,000 is considered as an income. So it is a non-operating income. It is shown in the credit side. So if you take the totals of these two sides, you can see that this side total you will get 2,46,000, but in this side you will not get this total amount. So the difference amount will be considered as fund from operations. This is how you have to prepare an adjusted profit and loss account. So once you have prepared adjusted profit and loss account, you have to go for fund flow statement. And previously in the previous case, I have mentioned that you have to go through all these account mentioned here, and on the basis of information given in this account, you have to prepare adjusted profit and loss account. Remember, in these non-current accounts, you need to consider only one item, that is two P&L and by P&L items, that is items that has to be recorded in the profit and loss account. If you just go through all these accounts, you can see that there is no such item that is mentioning P&L. That's why we have not mentioned this area while preparing adjusted profit and loss account. You may think that previously I have mentioned that you have to go through these accounts and go through profit and loss account items. Since there is no information regarding any of the items that has to be transferred to profit and loss account, we have not mentioned this area while preparing adjusted profit and loss account. We only maintain on the details given in balance sheet as well as Addition information. In the balance sheet, there is no information regarding any of the items that has mentioned, and in the only details regarding non-operating items are given in the adjustment alone. That's why we relied only on addition information. Once you prepare adjusted profit and loss account, next you have to prepare is statement of sources and application of fund. It is another name for fund flow statement. You can use any of the terms. It's up to your discretion for writing the title of the statement. But you can't specify any new names for the statement. You need to specify the stores names that has been mentioned during the theoretical part. So we all know a statement of source and application of fund is a form with the left hand side represents sources and right hand side represents application of fund. And before we go into that, first of all, let us record the first item that we have found in this page. Here it is, fund from operation, 1,73,000. So we will record that one. So after fund from operation, just go through these two areas. This one is the question. This one was the non-current accounts. So before we prepare source and application of fund, remember we began with schedule of changes in working capital. And we all know what was the result. So let us record for that one, decrease in working capital. So decrease in working capital is always a source, so it is shown in the sources side. After schedule of changes in working capital, we went for preparing non-current accounts. In this part, we all know what all items has to be considered. That is, you just go through all those items that represent cash or bank. First one, plant and machinery. Here, if you go through it, you can see there is one item to cash. So it is considered as purchase of cash 60,000. So that account is over. Next one, share capital. Here, if you look closely, you can see that there is no cash or bank, but there is one thing, stock. In the previous slides, we have discussed a theoretical part where what all transactions can be considered as a transaction that affect the flow of fund. That means in a journal entry, there are two items, one is debit and other is credit. One has to be non-current item, that is fixed item, and another has to be a current item. So in this entry, share capital and stock, the entry was stock account up to share capital, where stock is a current item and share capital is a non-current item. So that will result in change in fund. Fund in general sense fund means cash, but in broader sense fund means all those current assets. So this stock is generally considered as a source of fund. So issue of shares 40,000. I hope you understand the concept. And you may think that here the stock was acquired by issue of equity shares. So there is an increase in stock. Then how come an increase in stock, that is increase in asset, is considered as a source? Remember, here the stock is acquired by issue of equity shares. So whenever shares are issued, it is considered as a source of a fund. So by issue of shares, you have acquired stock. It is some sort of fund. Stock and cash all comes under funds. In that sense, you can say that it is a source of fund. That's how year 40,000 came. So that account is over. Next one, goodwill. There is no information regarding goodwill. No cash items are there. In investment, there are two cash items. First one, cash of rupees 2,000, which has been earned as interest. So it is shown as interest received 5,000. And remember, here in the cash amount rupees 2,000, but we are recording interest received 5,000, because if you go through the adjustment, it is said that during the year 5,000 has been received as interest on investment, and out of 5,000, 2,000 is recorded in the concerned asset account and 3,000 is shown as income. But in overall sense, you have earned a rupees of 5,000 as fund during the period. So interest received has to be shown as a total amount of 5,000 in the sources side. That's how you have to prepare. I hope you are following the concept. Next one, in the investments left side, there is a purchase of rupees 12,000. So it is an application, it has to be shown. Next one, purchase of land. How we went for purchase of land? So once you clear out this non-current accounts, you have to go for the liability side, balance sheet side. In balance sheet side, if you go through the various items, you can see that first one is goodwill. We have already prepared that account, so you don't have to worry. Next one, land, there is no account, so you have to consider the difference. In the beginning it was 2,50,000, in the end it was 3 lakhs. So there is a difference of rupees 50,000 increase means there is a purchase of land. Next one is redemption of debentures. So if you go through the further items in the balance sheet, that is plant and machinery, we have already prepared account and we have dealt the adjustment. So you need not have to take the difference again. Once you have prepared the account and consider the items in that account, you need not have to take the difference. Next one, investment. We also prepare in account or regarding the investment, so you need not have to take the difference. Next one, stock, debtors, prepaid expenses and cash. We have dealt that all items in the schedule of changes in working capital. In the liability side, there is share capital. We have prepared a share capital account and we have dealt the adjustment regarding the share capital account accordingly. So remember, once you have prepared an account and you have dealt the items within the account, you never ever take the difference between the item. It doesn't mean that we have taken the difference in case of land, but we didn't take the difference in case of plant and machinery. Never think like that, because plant and machinery we already prepare an account. So you need not have to take the difference here. For land, there was no accounts prepared, so you have to take the difference. Okay, next one, capital reserve. As I have mentioned in the beginning, the both amount remain the same, so the effect is nil effect. P&L account, we have took the same item in the preparation of adjusted profit and loss account. You so need not have to worry about it. Next one, debentures. In the beginning it was 3 lakhs and in the end it was 2 lakhs. We have not prepared any account relating to debentures, so you need to consider the difference in here. So there was a decrease in the amount of debentures. So whenever there is a decrease in asset, it means we have paid certain sum of money so as to decrease our liability. So decrease in cash means it is considered as an application. So redemption of debentures 1 lakh. Next one, creditors. We have dealt that part in schedule of changes. Bills payable, provision for tax. We have dealt all these areas in the concerned statement. And once you dealt with non-current accounts, schedule of changes in working capital and this balance sheet, you simply go through the adjustments if there are any items you have skipped. First one, interim dividend 30,000 was paid. We haven't taken this item anywhere else. You might have taken this amount in the preparation of adjusted profit and loss account. And do we have to take here? Yes, you have to take here, because it is just like a preparation of final accounts. If you remember, while preparing final account, we have kept a concept that whatever information given in the adjustment, you have to take that item twice while preparing the statement. The same concept is also followed here. Interim dividend has been taken in the preparation of adjusted profit and loss account, but it has to be taken in the statement of source and application. Since it is a payment, it is an application of funds, so interim dividend paid 30,000. And if the further adjustments we have dealt is the second adjustment, third adjustment also been dealt, depreciation also dealt, provision dealt, and income also dealt. So once you have dealt all the adjustment, if you take the totals of these two sides, you will get an equal amount, and it will be a tally amount. So just try to find all these cases. So this is how you have to prepare a fund flow statement. Remember to follow these steps. You need not have to follow the step which I have mentioned accordingly, but still you have to follow the principles. The steps is up to your discretion that what all steps has to be followed. Sometimes during the computation I might mention to go through this one like that. It doesn't mean that you have to follow that step. It's up to your discretion, but you have to follow the principles and steps. So just go through all these areas, familiarize each and every steps. You may sometimes find it confusing because a lot of adjustments and lot of points are mentioned in a single case. Don't worry anything about it. Just understand each and every step, analyze it logically, and after discussing different cases, you will get a clear picture and proper understanding regarding the preparation of fund flow statement. So just go through all these cases. We will discuss about the further cases in the coming session and try to take the total of these two sides. It will usually be at same amount. If you are getting a tally or if you are getting a same amount in these two columns, your computation was correct. Otherwise, you have to go through all these steps and make sure whether there is any missing part. So this is how you have to prepare a fund flow statement. So just go through it. If you have any queries, please let me know.